Hello viewers, welcome back to ICT Trading Concept, and here I am again. Yesterday I have uploaded a video about macro. I talked about four macros over there, and today I'm gonna analyze that four macro. What happened yesterday? I mean the Tuesday's price action. I will go that four macro, and you will see it is working or not. But before going over there, I came to the rules again. You can say this is revising the rules, but I won't go for all of the rules. I'll just point three things from here. First of all, I told you that you will go to the Forex factory or any other calendar you like to check there is any high or medium impact news around these macros. Okay, if you don't go over the calendar, you are already in a losing trend. So you have to check it. The second thing, start from the 15-minute chart to mark the last swing high above the current price and last swing low below the current market price. Okay, just keep it remember. Lastly, I told you here, if you see something strange, different, or you cannot able to mark the last swing high or swing low, anything outside of these rules, you will skip that day. I'm repeating this again. If you cannot able to mark last swing high or swing low, that is, I mean the swing high that is above the current market price and the swing low which is below the current market price. Okay, it's written over here, above the current market price and last swing low below the current market price, you will skip that day or that macros. So now let's go to the chart. We'll see what happens yesterday. Before going to the market, I would like to actually highlight one thing from the Forex factory and the calendar. You see, this is Tuesday, 26th September, 10 a.m. New York local time. There is a high impact news for USD, CV consumer confidence. Okay, this is a high impact news, and it will release at it has released at 10 a.m. That means the first macro 9:50 to 10 a.m. 10:10 a.m. you can't trade in that macro. Is it clear, guys? Let's go to the market now. Okay, so here is the Nasdaq market. I'm just using the reply mode, and you see this is 10, and I mean here is your 10. There was the news, so I'm just skipping this macro. Instead of going 10 macro, I'm to the second macro. That means 10:50 to 11:10 macro. This is 15-minute chart, and the first rule is I will check the Forex factory, and I saw that there is no medium or high impact news at 11. Okay, or around that this macro. And then the second rules, I will go to the market and I will mark the last swing low and last swing high. I'm doing this. Here is my last swing high, and there is my last swing low. This swing low is just below the current market price, so it is valid for me. Now I will see what this swing high and this swing low made. If I go back, I don't see any information about this swing low. You don't need to go so far. You can just stay like over here. If you see anything very significant over here, it will be okay for that. But in like, see here what it did, this swing high, what it did, it has actually cleared this swing high, or you can say the buy side liquidity, it has cleaned. Okay, but this swing low, yeah, you can say it has cleared this liquidity, but you see it has already gone so far from this level, so far. So in my opinion, this swing low has nothing to do with the current market price, but this swing high, it is clearly cleared all of the liquidity from here. Now I don't think so I need to go 5 minute because it is clear price action for me. But if you want to go to 5 minute as well, you see it is the same thing. So nothing very, significant for the swing low, but the swing high, it has cleared the buy side liquidity. So, and market has already came so far from this swing high. In my opinion, I'm now going toward this swing low. That is my bias. I would like to go, that market will go and take the liquidity from the swing low. The reason is it has already come from here to here, went little bit higher. In my opinion, this is the retracement because market has done its job upper here. Let's go to the 1 minute chart. Here is your 1 minute chart. If you see in the 1 minute chart, the market, it actually cleared this buy side liquidity. Okay, and now it is waiting for a market structure shift. This is my opinion, guys. I'm just making this simple so that it is helpful for you to understand. Okay, and I'm using reply mode from 10:48. So let's go what happened to the 10:50 to 11:10 macro. Okay, I'm already in the 11:50. That means the macro has started. And the first candle, you see, it has just breached the market structure. But should I take entry to the fair value gap or something? Should I go for that? Do you remember the rules? When the price will be inside the macro, first it has to take some liquidity. In my opinion, it has actually taken the liquidity from sell side. I will look for a market structure shift to the upper level. Let's go. Now it has consolidate over here and this candle. Still now I'm thinking, did it make the liquidity here and take it? It will depend on the market structure shift. And here, if you see, this this is very nice market structure shift for me. If you mark this low and this one, over here it has cleared the liquidity. It has built the liquidity first, then it has cleared the liquidity, then gave me the market structure shift. From the higher time frame, I am expecting that market will take this low. So when market has shifted the structure over here, I will look for a fair value gap. So I got a fair value gap, and let me just make it bigger. Here is my fair value gap. Now, if market can touch the fair value gap, I will take my short and I will go for 20 handle. And that is my 20 handle. So let's see what market did actually. There, you see this candle, that very next candle, it went to the fair value gap, and you see it was consolidated and there. So if you go to this candle and there, you have already done your job. So 10:50 to 11:10 macro gave you a sorry, gave you a winning trade. Okay, at 10 a.m. there was a news, so I skipped that. At 11:50, sorry, 10:50 to 11:10 macro, I got this entry and this is a winning trade. Is it clear, guys? Let me know. Now let's go to the what can I say, 150 to 210 macro. I'll go over there. So at 150, I told you that you have to mark the last swing low below the current market price. If you see the market over here, and this is 145, I mean just near about 2. If you go to the 50 minute, as I'm using the reply mode, so it is showing over here that market is over here, and if market is also over here, there is no swing low below the market price, because this is the current candle. It can go higher and then it can close lower. So I don't trust this one. If you go to the 1 minute chart, you will see at 49. This is the last current price. Okay, so I'm using reply mode, so that's why in 15-minute chart it has shown me that market closed over here. The candle closed over here, but if you are in the live market, you would see the market was over here and there is no swing low below the current market price. So you remember the rules. This is not valid. That means you have to avoid this one because you don't have any swing low. You don't know where market will go. Though you have the swing high, but you don't have any swing low. That's why you have to skip this one. There is no trade entry, nothing. I mean, in the macro time, you expect nothing from here. So I'll skip that one, and as well as the three macro, it has also made the same thing. If you go over here and let me show you. Yeah, 1 minute chart, you will see there is a swing low, but if you go to 5 minute or 15 minute, let me show you. In 5 minute or 15 minute, when market was live, there was no swing low below the market price. And guys, this is not low. If this candle is not closed, then this is not low. Okay, this candle can just reverse and closed over here. So you can't mark this as a swing low. You have to find something very specific, very clear. So there is no swing low. That means yesterday at 10 a.m. we have the high impact news. At 11 a.m. we got that macro and it has worked very very beautifully. Then 150 to 210 macro, there was no swing low. Same 250 to 310 macro, there is no swing low as well. That means we had only one chance yesterday and we got it. It worked very beautifully. And guys, I would like to show you something. It's out of, I'll just show you. Okay, here is the last macro. I didn't talk about this 350 to 410 macro. It has something different actually. It needs more practice to master of this macro, but I'll show you the actually what macro do. The Mickey Mouse move macro actually doesn't do it. It do something like here. Okay, I'll show you. If you mark this last swing low, this is your last swing low, and all other things you will do it by yourself, but I will show you the macro what it did. If you see what time is it is 3:48. So after 2 minutes it will go inside the macro. 1 2, so it's already in the macro. When it's in the macro, it has cleared. You see this low, there the swing low, and below every swing low there is sell side. So there is your sell side, it has taken over there, and then it has given you a very nice market structure shift over there. This is your market structure shift. This is your fair value gap. This is your fair value gap. If you take your entry over there, you see your trade. That is your trade. So you have to expect something like this. When the price will go inside the macro, you have to expect something like here. It is the macro, man. Trust me, it is the macro. Not every day you will find this type of setup, but you will find it. Yeah, like 2 to 3 times in a week, you will find this type of macro. So that's all about today's video. I think it will make clear everything. And if you're really new to my channel, please subscribe to my channel. Give me a thumbs up if you love this video. And cheers, guys. Bye.